This is not the first video on Ethereum on this channel. I've published many videos before, most of them very bearish, and since then Ethereum underperformed pretty much everything else in crypto. The question is, does it make sense now to buy this bottom? Is the crash finally over? Let's have a look at some data points most people are not considering. Let's see what drove the crash and if those factors still prevail. Now, we all know that in the early days Ethereum was proof of work, right? We could mine Ethereum with our GPUs, we would get ETH in our wallets, we can then sell that ETH or we can use this in decentralized finance. That changed. It changed on the 15th of September 2022. And unfortunately, since then, Ethereum did not do that well. This is the Ethereum dominance. So how much of all of crypto is in ETH? And that moved from 20% to now 10%, an underperformance of roughly 50%. So note how I'm not talking about US dollar prices, I'm talking about relative valuations. And the reason why I do this is because crypto is highly correlated, right? When Bitcoin goes up, then Ethereum tends to go up as well. When Bitcoin goes down, the altcoins tend to go down as well. So really, in the end, whenever we buy a cryptocurrency, we have opportunity costs. We have to consider where should we deploy our capital. It's pretty much asset A versus asset B. We have to figure out what's the best performing asset within an asset class. We don't get that much diversification benefit by buying many different assets within crypto. We only get diversification benefits by buying different asset classes. So let's say crypto and stocks and property and precious metals. That's how we diversify, not necessarily within an asset class. Within an asset class, we have to find out what's the best bet. Now, many people said that the Ethereum ETF will turn around things. The Ethereum bulls were convinced that with the launch of the Ethereum ETF, Wall Street buys Ethereum more and more, and then Ethereum will do better. Unfortunately, in the last 7 days, we've only seen 0.5% supply absorption, and we didn't see that much more before that either. Yes, there were a few weeks where Ethereum ETF did see some demand, but Bitcoin saw way higher inflows as well. This was directly after Trump got the presidency. Now, there are two major drivers for this Ethereum underperformance. We've of course seen the move from proof of work to proof of stake, but unfortunately with that we also saw the roadmap of layer 2s, right? Optimism, Arbitrum, Polygon, etc. Those got promoted within the Ethereum ecosystem quite a bit. And because of the adoption of those layer 2 blockchains, the usage of the Ethereum chain itself went down. And unfortunately, the circulating supply of Ethereum is directly linked to its usage. Have a look at this here. This is the circulating supply of Ethereum. And unfortunately, in the last 2.5 years, we did not see Ethereum becoming ultrasound money. Yes, at the beginning, the supply went down because the staking rewards were smaller than the daily burn. So there's simply a lot of usage of Ethereum. Whenever a transaction gets made with Ethereum, some of the ETH gets burned. But then when Ethereum isn't getting used that much, then the staking reward tends to outperform the burning. And then the supply is increasing. And so there had been a turnaround in March of 2024 when Ethereum supply suddenly started rising again. So here again is the Ethereum dominance, and here is March of 2024. And since we see the supply going up, Ethereum is becoming less and less important of a part of all of crypto. So this is where the underperformance accelerated quite a bit. What we've got over here is again the move from proof of work to proof of stake. What we've got over here is where the supply started to increase. And then there's another data point over here on the 15th of September of 2024. What happened over there? The answer is in this chart. This is the staked Ethereum over time. So at the beginning, right, just before the merge, there was more and more Ethereum that got staked, that got locked up in order to get the rewards from the expanding Ethereum supply. Now, whenever Ethereum gets staked, it gets taken out of the circulating supply. Less supply with the same demand should mean a rising price. Unfortunately, this is not what we saw. In practice, what happened is that too many people exited the Ethereum ecosystem and then went to, for example, Solana, simply because you couldn't make money anymore just by mining. And so there wasn't enough new people coming in. Ethereum just ended up being the expensive alternative to every other other blockchain. And now have a look at what's happening in September of 2024. The number of staked Ethereum is going down, and this is a relevant number. We have 34 million Ethereum that is staked. The total circulating supply of Ethereum is 120 million. So that's 28% of all of Ethereum supply that's currently staked that now tends to get unstaked. Now, why do people unstake Ethereum? Probably not just to keep it in a hardware wallet. These Ethereum tokens get sold, right? People simply just exit the ecosystem and potentially buy Bitcoin or buy something completely else with it. So Ethereum already underperformed with this shrinking supply during the staking mechanism. Now people tend to net unstake, and so the underperformance is even accelerating. So that's what we're seeing over here. And then the question is, what happens with those trends, right? The Ethereum dominance still has quite a bit of way to go down. A drop of another 30% versus the rest of all of crypto would not be that surprising, at least when we expect that the trend that started 1 year ago will prevail. So that's the supply increase. And at the same time that this trend will also continue, that Ethereum continues to get unstaked, right? What I find so fascinating about those charts is that they have relatively little volatility. It's not that much to be argued that we are now turning around with staking or that we are going up with the supply. It's relatively predictable. Thus, I think it is predictable that very likely Ethereum will continue to do bad. Now, there is some very important third order effect from this. There is a very strong correlation between Ethereum and the altcoins, because the altcoins partially are traded versus Ethereum on the decentralized exchanges. So altcoins are priced partially in Ethereum. When now Ethereum goes down by 10%, then those altcoins automatically also go down by 10%. And have a look at what this means. Here are the top 100 cryptocurrencies with their performance in the last year. Now Bitcoin is over here. There are 21 altcoins that did better than Bitcoin, and there are 78 altcoins that did worse than Bitcoin. And this happened during a time period where Bitcoin made profit, 83.6% in the last year. Isn't it fascinating that almost 80% of altcoins do worse than Bitcoin during a time when the crypto market as a whole is going up, right? When prices as a whole are going up, when Bitcoin almost doubled. Shouldn't it be intuitively the case that most altcoins outperform Bitcoin when prices tend to rise? Because altcoins are more risky, so when prices go up, the altcoins should go up more. Why are 80% of altcoins doing worse than Bitcoin during a year where everything went up? Again, I believe it's driven by the underperformance of Ethereum. Ethereum is doing poorly, and so the altcoins get also drawn down with it. And now there is potentially a chicken and egg problem here, right? Did the altcoins go down because Ethereum went down, or did Ethereum follow because there was so much speculation in the altcoins with the meme coins, and the altcoins just got sold off, and so Ethereum also had less interest? What was actually the leading driver? Was it Ethereum or was it the altcoins? I believe, again, it's Ethereum, and here is why. Have a look at this chart. This is total 3 relative to Ethereum. So this is the altcoins that are not Bitcoin and Ethereum relative to the market cap of ETH. Now, we already know how Ethereum's dominance went down, but what we see over here is that the altcoins, comparatively speaking, to Ethereum went up. So Ethereum lost more than the altcoins did. The standing of Ethereum within crypto went down by 50%. The standing of the altcoins relative to everything else went down by only 28%. So some altcoins can withstand the Ethereum decline, but they are getting pulled down by it. The altcoins that are doing better probably are mainly listed on Solana and on Sui and on other blockchains that aren't that coupled with ETH. Now here's the problem. Because Ethereum is still more than half of the total value locked in decentralized finance, there's still a lot of way to potentially go down. Have a look at the market cap of altcoins relative to the market cap of Ethereum. It's rather on the higher end. In other words, the altcoins aren't really suffering as much as Ethereum holders. There is still a lot of way to go for the alts to come further down. We are already in a situation where almost 80% of altcoins don't outperform Bitcoin, even during a bull run. And still, it might get worse. But of course, it only gets worse if you are buying altcoins. If you're trying to find the 20% or maybe even less going forward, that outperform Bitcoin. If you are okay with putting the odds in your favor, you can just bet on falling prices, falling relative prices of the 80%, right? You can bet on altcoins doing worse than Bitcoin and make money from that. And that is what this chart here is showing. This is the balancer token relative to Bitcoin. Very little volatility, very constant underperformance. And during the span of a single year, Balancer tends to do worse than Bitcoin by more than 70%. And the reason for that is an expanding supply. When the team and the investors get more and more tokens over time, they tend to sell off those tokens. And if the demand doesn't grow as quickly as the supply does, then of course things go down. And so that's the real way to make money in crypto during times like this, right? When we don't have a massively expanding bull market, when it's player versus player, and when only 20% of altcoins outperform Bitcoin, then we can simply either just hold Bitcoin and make our lives easy, or if we want to outperform buying and holding Bitcoin and want to be a bit more technical, betting on altcoins, especially on weak altcoins with an expanding supply, is the recipe to generate alpha. That's at least what I'm doing, and I'm talking about this regularly in the premium membership here as well. So check this out. This is a video from thebitcoinstrader.com from the premium membership, gaining from relative valuations. So from Balancer relative to Bitcoin, not Balancer relative to the US dollar, because we want to hedge ourselves against a potential crypto rally. We're just betting on relative underperformance. Or have a look at this, how to win in bear markets by shorting altcoins, or this here, shorting optimism relative to BTC. Optimism is at all-time lows relative to Bitcoin, by the way. Or here, how to profit from falling prices. Or over here, even a backtest, a simulation on shorting altcoins. There's more than 100 tutorial videos in total in premium. It's not just about shorting and betting on falling prices. It's also about risk management, portfolio diversification, buying other asset classes as well, right? Achieving diversification. Feel free to check it out. Because a lot of people got burnt buying altcoins and trying to find the 20%, I have reduced the monthly rate as well. It's now $125 per month. There's a 1-week money back guarantee. So in case you don't like premium, just message me within the first week and I'll refund you 100%. There's really zero risk for you. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. So see you next time in YouTube, or potentially see you in premium as well. Cheers.